wanted to be like in the Summit area, so this is kind of like Maplewood, Short Hills. That
I do not, I mean,
I never heard of it till we started looking, to be honest with you.
yeah. No. What I was going to say is, I mean, moving, like, I mean, you should get paid for it somehow.
It is.
It's brutal.
The good thing is I am neurotically, retentive, organized, and clean. So packing won't be that much of a shit show. It's just, but packing is already tedious, and I've cleaned out closets and stuff. You know what I could do? I can swing it to the other side. So unless she gets this. And I've already done all the cleaning out part. It's just like, it's like the last.
That's the only thing that's good is the cleaning out. You're like, do I really want to move
You know what I did? I told the kids, I told everyone, what you haven't used in the last year, get rid of. Because they're at their age, if they don't play with the toy, they're not going to play with it anymore.
How old are your kids?
They're 11, 12, and 14.
Oh,
They're
okay.
stepkids.
Wow.
And I'm like, throw everything out. If there's dust on it,
That's interesting. That's what my wife just made me do with my wardrobe. She goes, if you haven't worn it in 4 years,
get rid of it.
you're getting rid of it.
Get rid of it.
And I go, well, this isn't should go get it altered. But if you are not wearing something in 4 years, if I haven't seen you wear it, I'm getting rid of it.
I throw everything out. If you haven't worn it, if you haven't played with it, we got rid of and like I said, I have cleaning ladies come once a week. I'm incredibly organized, but you don't realize how much toys and
Crap.
stuff over the year accumulates when you actually open the closets and stuff like that.
Yeah.
Yes.
Awesome.
Yeah, that's cool. We could do some Times Square stuff. We could do some Times Square stuff.
Well, that's getting the program.
What does that mean?
It means when you guys come on, then that makes it's going to be weird.
Whatever. Then we. Yeah, the tower's cool.
So, wow, how are the teenage years? I've got a 9-year-old. It's just starting.
It hasn't been, again, I don't deal with it every day, but it hasn't been too bad. They have kind of always fought with each other because they're so close in age. So they're pretty good, but they're old now. They can go outside and play. They can basically take care of themselves, so it's not too bad. The youngest is my stepdaughter. We're super, super close. We do everything together.
Nice.
So we'll just be like, I'm like, Mia, let's go for nails and toes and get away from the boys. Or I'm like, do you want to come with me to my mom's house? You want to go with me to my friend's house? So we kind of get away with it a lot, but they're good. I'm super close with them, and I'm close with their mom. Like, it's a classic modern, well, maybe not classic, but like modern family situation.
Yeah.
So it's cool. Yeah, I think it's cool. But I'm actually taking Thursday, Friday, and that Monday off when we move, just to,
Oh, yeah.
yeah,
Yeah, it's too much.
yeah. So hopefully,
My wife wants to, not to say I have enough time to do it right now, but she wants to blow out an area of our house and put a master bedroom on
Yeah.
and stuff like that. And I'm like, I do not have the bandwidth. We'd have to move out for 8 months.
know.
And I'm just like, she keeps bitching at me. Anyway.
Good morning, traders, and happy Friday. I'm Joe Malandrino, Global Markets Reporter at Nasdaq. Joining me today is Brad Lamensdorf. He's a portfolio manager at Active Alt and also of Nasdaq-listed SQZZ, ticker SQZZ. This is an interesting ETF because it looks to take advantages of stocks with a high short interest on it. We're also going to discuss some challenges facing the ETF industry. But Brad, let's have a quick update on SQZZ, and just launched about 2.5 months ago.
That's right. Everything's been going good. As you know, when an ETF first launches, A brokerage firm will launch with what's called a seed to give you the certain amount of shares that you need to go public. We've gone through our seed, so we're out of our seed now. So now it's, you know, solid shareholders within the company. We've had a few nice hits. We had Weight Watchers, as we talked about before. Chegg, CHGG, has also been another strong winner for us. And we actually just started peeling back TREE, Lending Tree, which has been a really strong performer for us as well. So everything's going pretty well.
All right, well, that's what we'd like to hear with our NASDAQ listed ETFs and companies. But let's talk about the industry from a more broad perspective. I think media and marketing firms, they try to position ETFs or passive investing as it's easy. It's a simple way to put your money to work. As a portfolio manager, is it really that easy to run an ETF? What goes into that?
No, the amount of moving parts is astronomical when you're dealing with listing and operating an ETF. I don't think we have enough time to really review all the different pieces, but the processing and making sure that all of the information is on the website the next morning, at least in our case, to make sure that the market makers have the proper weightings and portfolio positions so that they can make a proper bid and an offer. So it's a very complex ecosystem that has to be created to get these things done. And there's no question there's probably 5 major different groups that are making all of this stuff work. So it's pretty in-depth, actually.
Well, let me ask you this question. Not all exchange-traded products, and ETFs are part of that family, are in fact ETFs. There's a lot of moving parts there as well. Do you think ETFs have lost their identity, and what are some ways that the industry can make it more easy for investors to understand and identify what's an ETF, what's an ETN?
That's really a great, so for instance, just an FYI, so there's also things called ETNs out there, which are exchange traded, but they're actually exchange traded notes. So that's much different than a ETF or even an active ETF in that you're not buying the underlying security. You're buying a bond that one of the banks issue. So for instance, when you're talking about some of the oil ETNs, for instance, the Credit Suisse is a very large issuer in this area. They will create a swap that's owned by a bond which represents the price of what you're trading and what you get. So think about this. If we were in the middle of the financial crisis and Credit Suisse went bankrupt, you're going to have a very serious problem in that ETN because you didn't own oil, you owned a bond that was rated by Credit Suisse. So it's a much different animal. So there's lots of different ones out there, as you say.
Well, last time you were with me, we spoke about the SEC approving or in the process of approving a 4-time levered exchange traded product.
Right.
And just, it was at the beginning of, or the end of last week, beginning of this week, that they have put a pause on that approval process. Do you think that was the prudent thing to do?
Oh, without question. You know, the SEC is mandated to make sure that everything that they're approving to the public is vetted out properly. There's no question that the inverse type products that are traded are already having problems in that they don't track their indexes properly and the volatility chews up returns. So a lot of investors aren't sophisticated to really understand that and just get involved with it for the protection and don't really realize the downfalls of the products, which frankly shouldn't really be listed at all.
Right.
And the reason I say that is because when you look at the prospectus, it says that you're only supposed to hold something for a day. So I know that the SEC totally does not like churning an account, but yet the prospectus encourages churning. So it's really not a very well vetted out philosophy within inside of a structure.
Right, and then who's to say it won't be 5, 6, 10, you know, infinite times levered?
Totally, they
right.
could totally, yeah, it opens up Pandora's box.
Right, so price competition in the ETF industry is alive and well, and that's good for investors, but is it crunching the industry?
Oh, it is really crunching the industry. Mutual funds and hedge funds are probably taking the biggest brunt of that. There was lots of fees associated with inside of buying mutual funds, back-end loads, front-end loads, withdrawal fees, all these type of fees that the investor really probably wasn't aware of, although it's disclosed. You know, really who reads a 30-page prospectus that's talking about the disclosures. So ETFs, that really isn't done as much with inside of all of those. There's specifically like a 12B1 fee where a broker gets paid to sell a mutual fund. So it's harder to market from an issuer's point of view without a wholesale team and getting them paid. But yet it does help the investor because they're not getting hit on more fees. So the compression is continuing to come down in everything, and really it's hurting the hedge funds and it's hurting the mutual funds.
Well, let's wrap it up with this. We saw some volatility in the market last Wednesday, May 17th, which was a welcome sign for especially your day and your swing traders. Now, if we were to get sustained volatility or perhaps enter bear market territory, how would that impact ETFs, passive ETFs and so forth? Because there's so many products out there that have been issued in the middle of this 8-year bull run. They haven't experienced any massive volatility.
Well, so there has been so much money put into these specific underlying issues. So let's dummy this down, and let's say there's an ETF that's passive that has 10 ETFs, 10 stocks in the ETFs. So when you have a lot of buying, everyone's buying those same names over and over and over every day. So it's probably pushing those 10 names to an unrealistic situation. When you want your money back and the bear market starts, they're going to be selling those names just the same way. So the elevator works up and it works down the same way. So the pressure that stocks are feeling right now, up or down, has to do a lot with those flows, so they certainly will get tested.
All right, well, thank you very much, Brad, for joining me, and thank you, Twitter, for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.